Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sitc International Holdings Company Limited Annual Report. Sitc International Holdings Company Limited offers a wide range of businesses and services to cater to its customers' diverse needs. At the core of its operations are shipping logistics solutions that provide integrated transportation and logistics services across various regions including mainland China, Hong Kong, Taiwan, Japan, Southeast Asia, and internationally. The company's services include container transportation, freight forwarding, shipping agency, depot, and warehousing services. It also provides specialized services such as vessel leasing, land leasing, and technology support to its customers. In addition, Sitc International Holdings Company Limited offers a range of marine-related services, including container maintenance, customs declaration, and multimodal transportation. The company's fleet consists of 114 vessels, with a total capacity of 180,255 TEU, which includes both self-owned and chartered vessels. This extensive fleet enables the company to provide reliable and efficient shipping solutions to its customers. Furthermore, Sitc International Holdings Company Limited engages in land and building holding activities, further diversifying its business portfolio. Overall, Sitc International Holdings Company Limited's comprehensive range of services makes it a one-stop shop for all shipping logistics needs. Its extensive fleet, specialized services, and diversified business portfolio position the company as a leading player in the industry. The stock price of Sitc International Holdings, 1,308 HK, has skyrocketed by 93.56% over the past year, while Site Centers Corp. NYSE. Sitc has seen a substantial increase of up to 120.4%. Several key events have contributed to these significant gains. For Sitc International Holdings, strong financial results for FY 2025 were a major factor. The company reported an 11.6% year-on-year increase in revenue and a 19% rise in net profit, driven by a 7.8% increase in container volume and a 4.5% rise in average freight rates. This was accompanied by a new 52-week high of 34.58 on March 10, 2026. Site Centers Corp's stock price has also been influenced by its strategic plan to sell assets and wind up its business. The company reported substantial asset dispositions, debt repayment, and significant shareholder returns in Q4 and full year 2025 results. Special cash distributions, including a $1 per share special dividend paid on December 30, 2025, have also contributed to the stock price increase. The combination of strong financial performance and strategic decisions has led to significant increases in the stock prices of both companies over the past year. Sitc International Holdings Company Limited market capitalization of $92 billion is significantly larger than the average industry peer of roughly $18 billion. This shows that Sitc International Holdings Company Limited holds a significant advantage in their industry. Sitc International Holdings Company Limited trades at a higher price-to-earnings ratio of 9 times and a higher price-to-book ratio of 4.73 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 24% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 5.79%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for a company can be identified through various factors. One key driver is the increase in container transportation, which has seen significant growth. Additionally, freight forwarding and shipping agency services have also contributed to revenue growth. The expansion into new markets such as Greater China, Southeast Asia, and Japan has also led to an increase in revenue. The company's ability to secure contracts with customers has resulted in an 11.3% increase in revenue from this source. Furthermore, other rental income has seen a substantial rise of 21.6%. The growth in container shipping volume by 7.8% and the average freight rate increase by 4.5% have also positively impacted revenue. The company's diversification into supporting logistics services has led to an increase in revenue from this area, with a growth rate of 13.5%. Overall, these factors have contributed to the company's revenue growth. The net income of a company has experienced significant growth over the past year. According to the extracted summaries, net income increased by approximately 19% from $1,034.3 million to $1,230.4 million in one period, and further rose from $1,142.8 million in 2024 to $1,310.5 million in 2025. This substantial increase indicates a strong financial performance of the company. The profit margins have also shown an upward trend, rising from 37.4% to 38.4%. This improvement suggests that the company has been able to maintain its pricing power and control costs effectively, leading to higher profitability. The combination of increased net income and improved profit margins is a positive sign for the company's financial health and future prospects. The company has demonstrated a positive trend in its operating cash flow over the past 2 years. In 2024, the company generated an operating cash flow of $136,093, which increased to $243,584 in 2025. This indicates a growth in revenue and efficient management of expenses. However, it's worth noting that there is another figure mentioned on page 11, which shows a different operating cash flow for 2025 at $1,421,000. Despite the discrepancy, both figures show an increase from 2024, suggesting that the company is generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, bank borrowings decreased substantially, with a reduction of $96,042, minus 84%, in one instance, and a complete elimination of debt by 2025. However, this trend was short-lived, as bank borrowings increased to $18.9 million by another point. Interest on bank borrowings also saw a notable decrease of 44.2% at one stage. Meanwhile, total finance costs decreased slightly by 0.5%. The company's net debt position improved, with the gearing ratio decreasing from 0% to minus 0.1%. These changes indicate that the company has made efforts to manage its debt and interest expenses effectively. Management is expressing optimism about the company's future prospects, citing a positive outlook on business development and success. This confidence is reflected in their commitment to investing in new container vessels and logistics projects as needed, indicating a proactive approach to growth and expansion. The management team believes that internal financial resources and bank borrowings will be sufficient to meet funding requirements, suggesting a stable financial foundation for the company's future endeavors. Overall, this outlook suggests a forward-thinking strategy focused on continued investment and growth, positioning the company for long-term success. That concludes the financial summary for Sitc International Holdings Company Limited. Feel free to comment below, and I will be happy to answer them when possible.